Every trader should know how to use trading channels. A very good evening to you traders, this is Mark. Welcome to your daily trading video. Excuse my croaky voice, I'll make this brief, but let's get down to it. Trading channels are not something that I have to admit, are not something that I use very often, but always wanting to develop, always wanting to improve, and more importantly, always wanting to adapt my strategy to the current market conditions. I'm realizing that they're actually a very useful tool at the moment. Now, a good friend of mine, Hipolitio, who's a trader over in Florida, we used to trade together about 5 or maybe 6 years ago. He trades exclusively the Dow futures contract on the exchange and exclusively the crude oil futures, the NYMEX futures. So, and one of his strategies is, I mean, he's very good at actually taking different strategies from different traders or textbooks or wherever and then making them into his own. But one of the things he does very, very well is trading with these trend lines. And he'll draw them in quite early on to see if he can develop a pattern from them. And notice this tweet he put out. I was looking at his Twitter feed, 4th of October, noticing how crude oil was bouncing off these trend lines, the upper and lower channel, multiple times, and he was kind of bracketing the trade. And that's fine. You think, okay, what's going on? But actually, ultimately, then what it does is it allows you to frame your trade going further, and you can basically say, well, while it's in that zone or appearing in that zone, I can start to look for shorts. When it comes to the bottom of that zone, I can look for longs, and it gives you an idea that maybe you're about to break out of something or whatever it may be. It's just a really good way of keeping boundaries on the trade. And ultimately, if we go back and look at crude oil, let me just dial in crude oil here. I'm going to have to use a cash price feed, so it's going to be slightly different from HIP's chart there. But look, this is exactly what he drew on. And if you look at the 4th of October here, where are we? 4th. So about this point in time here, he's drawn that on. But then you get another 2 days of multiple trades off of that channel before the channel finally breaks. And what's interesting to me is the earlier you can get that channel, the more confident you can get, obviously the more opportunity you can get. But look how many times these channels have been useful, not just for crude oil, but for various things. Crude oil breaks out of the channel, and what happens is, when it breaks out, you get a complete different change in sentiment. So even if you don't want to trade the channels, you can use them, put your trading channels on, and you can say, when the price breaks out of that, I'm going to get involved because something's going on. That was crude oil. We broke to the downside, then we ripped to the upside. We had the biggest one range day we've had for a while. If we take a look at the same on the US dollar yen or the pound, are exactly the same thing. The US dollar yen had its channel. Let's drag it in. As we talked about in a couple of videos, going down, 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 down. And if you're trading on a daily, very, very nice. Then it broke out of the channel to the upside, and it changed the sentiment of the market. It changed the structure of the market. It gave traders a bit more opportunity because of the supply-demand had changed. Now, whether it was going to break out and fake back down again, nobody knows at the time. But the point is, the equilibrium has shifted. It's the same with the cable, US dollar, GBP US dollar, should I say? Excuse me. We had this trading channel for the past few days. All of a sudden, we break out of it to the downside here. You can see, and then it takes out some key levels, some psychological whole numbers. But that break of that channel, I have to excuse, I'm not using the proper tool for this, but when it breaks out there, we get the dip down, the drive back up. You get the opportunity in the market, the volatility increases. So, like I say, even if you're not actually trading off the channels, it's well worth looking at them both intraday and on a higher time frame to see how the market is behaving. Very orderly within the channels, or is it about to break out? And an intraday as well. This is interesting for the day traders. Look how the Dow is sitting in this channel. You can frame your trade. It stops you getting involved here. Unless it's something else, you don't get involved. You're going to say, okay, well, I've got my kind of bracket for this trade now. If we push back up and start to stall on the tape there, I'm going to smack that short for a drive back down, maybe to the midpoint, maybe to some sort of level there. Or if I think the market's ripe for it, maybe a push back down to the lower end of the channel. It gives you a target for that prior breakout as well. If you've got a down sloping channel, it gives you a bit more extension on the trade. So anyway, just a slightly different tactic there. Something I say. Thanks, Hip, for putting those out on your Twitter. Go and follow him. Thanks for sharing those. And I like to look at other traders, how they're looking at the market, what they're looking at. So if anyone's else got anything they want to share, please feel free. But I'm going to go away now, look at all the charts, and I'm going to see where we can put on some channels. Anyway, had a great trading day today, guys. A little bit quiet across the board, apart from a few things. but plenty of volatility going on for the rest of the week, I would expect. So take care.